This is Chapter 11, The Powers of Congress, Discussion Number 2, The National Government's Economic Powers. We're first going to talk about Congress's power that have an economic influence to them. Remember that the Constitution needed to be redone from the Articles of Confederation because Congress could not get money for itself. And since it could not get money for itself, it was dependent on the states to provide money to it, and the states sometimes did, many times did not fulfill their obligations. So this was one of the more important ideas that was necessary for the Constitution. And so a power of the Congress or a power of the federal government was the idea that they would be able to tax the people directly. Taxes were necessary. They had to pay the debts that were incurred during the American Revolution. They have to pay people working for the federal government. They have to provide for the United States defense, pay for soldiers' salaries, pay for weapons, pay for fort construction, pay for the Navy. And so money is necessary. Also, in the Constitution, in the preamble, it says to provide for the general welfare. And that phrase has been used for a lot of the domestic programs that have been developed in the United States since the ratification of the Constitution. But there are other reasons to pay taxes as well, or to have taxes, and one would be a protective tariff. Yeah, the money coming in does go to the federal treasury, but what a protective tariff does is that if you have an import coming into the country and it's less expensive than what someone's making in our own country, then the people who are making the more expensive item in country are not going to be able to sell what the import is selling at. And so a protective tariff essentially automatically raises the price of the import so that the domestic manufacturer can compete with similar prices or maybe even a better price because the protective tariff jacked it up. Another way that taxes are used is the regulation of industry, where you have to get approval from the government in order to operate a particular factory or a particular occupation. For example, you have to get a license before you are allowed to use a vehicle on the roads. The same thing for an industry. And another reason to have a tax is what is referred to as a sin tax, that there are behaviors that are legal in the United States, but we really don't think they ought to be something done by the people. And so the government can install a sin tax on undesirable behavior. An example I can give you is that of tobacco. If you go past any of the convenience stores, some of them will say lowest prices allowed. That is because the sin tax has been established on the product to make sure the prices do not go below a particular level, and that's an example of a sin tax. But so there are different types of taxes while we're talking about it. There are what's referred to as direct taxes. Direct taxes are paid directly by the person who is responsible for the purchasing of it. For example, on a state level, property taxes are direct taxes, where you have to your parents write out a check and send it to the local government. Income taxes are direct taxes. But there is also indirect taxes, and this is where the taxes are assessed at some location, and instead of you writing out a check and sending it to the government, the seller collects the tax and sends it to the government for you. Tobacco, sales tax, protective tariffs are all example of where you don't individually pay the tax in. It's all collected by the business and then sent in for you. Also, in Article 1, Section 8, Clause 2, the government has the potential to borrow money. They had gone into debt before. They might need to go in debt again, said the Constitutional Conventionalists. They need the power to actually borrow money. Now, of course, if you pay any attention to any news going on in the last 50 years, you are going to see that the United States government has a debt, which means that we owe money. We've borrowed it and we still owe it. We haven't paid it back. On top of that, though, I want to make sure you understand that there's a difference between the debt, which I've talked about, and what is a deficit. See, a deficit is in one fiscal year, we've had a certain amount of money coming in and we've paid more out. So deficit is the sole difference in one year's financial setup. However, the deficit we had last year and the deficit we had the year before that and the deficit we're going to have this year, all those deficits combined going back in perpetuity, that's the debt. So you can't fix the debt until you have at least fixed the deficit because you're continuing to dig yourself a deep hole. Thought you'd get a kick out of a little cartoon there where the Congress is just saying, we're only allowed to have a certain amount of debt, but, we'll just stitch on another part of the stocking so we can get ourselves some more debt. Now, Article 1, Section 8, Clause 3, the power to regulate commerce. Again, remember, this is one of those important ideas that got the Constitutional Convention started with who was going to control the Potomac. However, in a case versus Gibbons v. Ogden, this really kind of set up what that power to regulate commerce was going to be all about. The Supreme Court ruled in Gibbons v. Ogden that the government had the power to regulate any commercial action that might involve a transaction. And that word "might" is going to be very important when we get to the 1930s, where a farmer is actually going to be arrested for growing his own wheat because he could have sold it out in the market and thus affected the prices of the community, but he didn't. Of course, this was during the New Deal that was going on for FDR. Now, to give you some other examples of commerce regulation, the buying and selling of guns, so therefore they can control what guns are in the country and what guns are not in the country. Car EPA mandates as far as how much is your car allowed to pollute or not. The idea of minimum wage, civil rights discrimination have all been regulated underneath this idea of regulating commerce. Now, there are 4 restrictions to this Commerce Clause. They don't have carte blanche to do whatever they want. First of all, they are not allowed to tax exports. That was an important thing for the South. No state can receive a better benefit from federal actions. If the federal government is offering it out, all states should be eligible for it. Also, no restriction of the slave trade for 20 years from the ratification. Of course, as soon as that 20 years was up, the very first thing that Congress did was made it illegal to import slaves into the United States. Of course, slaves could still be in the United States. They just couldn't be shipped in more of them. Also, they cannot require a ship to pay taxes in one location and then they can go to their port of call somewhere else. No matter where the ship came in, it was the United States' responsibility to collect the taxes there. And what this was supposed to do was prevent the United States government from playing favorites. For example, they could say, all ships have to go to Philadelphia or all ships have to go to New York City to pay the tax, and then they go to wherever they want to offload their goods. Well, what shipping company is going to have 2 destinations? They would just dump all their stuff there, and that's why the Constitution said, no, we're not going to let that happen. We're not going to play favorites. And then in Clause 5 of Section 8, the power to print money or to create currency. Now, states are forbidden from printing money. That's in Article 1, Section 10, Clause 1. However, the United States did have the power to print currency. Now, they didn't for a while, and they gave the power to print currency or banknotes to the First Bank of the United States. Of course, other banks were also printing banknotes as well. But one of the key things that we need to make sure that we pay attention to when we talk about currency is that there is a significant difference between a banknote and legal tender. Now, a banknote, technically, you could say that when parents write out a check, that is a banknote. That is a note from the bank saying that they will pay the merchandiser the amount of money that's on there. Okay, banknotes that were printed had pre-established numbers on them, but they essentially were the same concept as a check. However, no one's required to take your check or your parents' check. They don't have to. However, if something is designated legal tender, that means that the creditor must take the payment by law. If they refuse it, then technically the person who's purchasing doesn't have to pay them for the item. And so the government enforcement of legal tender is an important idea of the difference between banknotes and the money that you have in your pocket right now. That is a Federal Reserve note, banknote, but it's also designated legal tender. If you pull out any of your cash from the United States, you're going to see that there's that little statement there that says that this note is for legal tender. This concludes discussion number 2, the national government's economic powers, as a part of Chapter 11, the powers of Congress.